Everybody, and welcome back to the Mastering Commercial Real Estate Podcast. I'm your host, Corey Mortensen, and today we have a wonderful guest. I'm very excited. We're joined by Stephen Richards, Director of Acquisitions, Investor Relations, and Capital Raising at Streamline Capital Group. He brings a unique background in asset management, brokerage, multifamily investing. We dive into his approach to sourcing and evaluating deals, building strong broker relationships, and navigating the acquisitions process from start to finish. If you're looking to sharpen your acquisition strategy or learn pros and cons of capital and how to raise and manage investor relationships, this is the episode for you. Stephen, thank you so much for being a guest today.
Yeah, of course, Corey. I appreciate the invite and happy to be here.
Yeah. So, Stephen, go ahead and just introduce yourself to the listeners. Tell them where you're from, how you got started, and bring us up to date with your job now at Streamline.
Yeah, for sure. So I started real estate in 2018, right out of college. I got a job interview to go live in New York City, do property management and leasing out there for multifamily and retail. My wife didn't think I was going to get the job, but I knew I was going to, and luckily I did, right? Because that just propelled me forward on this journey I didn't know I needed to take. And so I lived in New York City. I managed properties in the Bronx and Manhattan and was in charge of all the leasing of all 1,400 units and in charge of all of the major capital improvements that we were working on. And then I was also in charge of a bunch of the renovations that we were doing. So wearing a lot of hats out there really opened my eyes to all the possibilities. And I had the thought, I was like, how do I become like my boss? How do I do what he's doing? And being fresh out of college, I didn't really know a ton about syndications and underwriting deals and doing all that. So my eyes were totally open to that, and it was an awesome experience. And then we had 2 kids while we were living out there, my wife and I. So while we were living out there, COVID happened. And I remember running to the gym one morning and seeing these news cars right in front of the Presbyterian Hospital. I was like, wow, COVID's here. And then from there, it just got crazy. We made it through 2020, part of 2021. And then finally, my wife and I were like, yeah, let's move back to Utah, where we're from. So I was born and raised in Utah and really love it here. A lot of my family's here. All of her family is here. And so it just made a lot of sense for us to come back. When I got back here, I actually started doing commercial sales at Marcus & Millichap. I was doing retail property sales and focusing on like single tenant net lease stuff. And then I had a buddy of mine who I used to work with in the brokerage world give me a call. He said, hey, I got this guy who is doing apartment acquisitions in Utah. He's looking for somebody, and I thought of you. Should give him a call. I was like, yeah, for sure. Like, love making relationships. I could go there someday. Ultimately, I was doing brokerage to do what I'm doing today. But I met with my business partner, Brian Briscoe, and it was an awesome few interviews. And then after that, I decided to leave brokerage and jump into the whole syndication for apartments here in Utah. So that's a little bit about me.
And in your journey and you kind of wanting to gradually move up and you know, what does my boss do? That kind of mentality, or, you know, that type of interest. What was the catalyzing event that really got you more interested into moving forward and progressing through your career path?
The lack of tax write-offs and a salary. Those are very capped. And I was doing a lot of work, and I realized early that no matter how much work I did at this company, I couldn't progress to where I wanted to be. And the only way for me to progress is I realized that I was going to work really hard and do a lot of extra stuff no matter where I was placed. So I might as well go somewhere that I could get compensated for that. And so that's why I moved into brokerage, right? Because, you know, there really is no ceiling. It's hard to break into, but there's a lot of potential there. And so, but it was the restrictions that made me realize I needed to move on.
Yeah. And if we have someone listening that is maybe looking to break into brokerage, commercial real estate, residential is easy enough to get into, but commercial real estate historically has been kind of difficult to break into unless you come straight from a program. You know, I was lucky with my collegiate degree, was very focused in that. But, you know, if you want to maybe jump from residential brokerage to commercial brokerage specifically, what are some, or even from an outside industry, what are some tips for people to start breaking into that and getting into those rooms and potentially getting into those positions?
Yeah, I would say the biggest thing is the mindset that you need to be successful. Most of the people who I've worked with in the Salt Lake City office have been extremely successful, but there have been probably 90% of people who weren't. It's just things take a little bit longer than residential. Yes, the pops are big, but getting into the commercial side of things, the relationships matter a lot. But in order to get your feet wet and to get going, if you want to be in the commercial real estate side of things on the syndication side or whatever, I would really suggest trying to get into a brokerage somewhere. They teach you a lot. I mean, transactions, relationships, communication, deal flow, all of that stuff I'm still using that I gained from my brokerage experience. And so if there is someone out there who really is looking to try to get their feet wet, doing real estate as an agent or as a commercial broker is such a good way to do it. It's hard. You'll have to grind. Maybe you break it off and you're incredible at it, but if not, it'll just propel you so much further ahead. I learned probably, so I was in New York City for 3 or 4 years. And within the first year of being a broker, I had learned everything, solidified everything I'd learned, plus probably triple what I learned while I was in New York City. So it's just really beneficial. And so I think there's a lot of skills that you can learn. And so if you can and you're able to, I would try to get into brokerage at some point.
I couldn't agree more. The brokerage aspect in my time at brokerage, both commercial and residential, have been probably more impactful than really any other role, maybe outside of the appraisal background, but that was really just one skill that I learned in that brokerage. You have to wear so many hats, be able to manage so much, and it truly is a people relationship type business. The hard skills are great to have, being able to approach real estate investment, real estate analysis, and talk the talk and all the jargon and things like that. But truly the skills that if you can master or even be halfway good at in brokerage, those will translate to success, if not in brokerage, then to a million other things. Taking a step back from that, you wear a lot of hats in your current role: acquisitions, capital raising, things like that. What would you say, and the title of this is Mastering Commercial Real Estate, right? Is there any skill or degree that you feel like you've mastered to this point?
So in terms of real estate, I still have so much to learn. And that's what's beautiful about real estate, is that you get to run into people who know a lot more than you and teach you a lot more tricks. And each deal that we do, there's always like probably 80% of it is similar to every other deal. But then there's like 15% that is a little bit different. And then there's that 5% that is like, I've never seen this before. And it seems to happen on every single deal. And so I think some of the things that I'm really good at is being able to solve puzzles, solve problems, and you learn a lot of that going back to the brokerage side of things. There's a lot of problems you have to solve to get a deal closed, and being able to, pull both people in, seller and buyer, to get to the same point is sometimes a struggle. And that same pulling and trying to make a deal work, sometimes you got to be creative. And so my business partner and I have been able to be really creative, be really open-minded to those things. And I think I'm really good at that. I'm also really good at follow-up, which I know sounds funny, but being good at follow-up and on top of your schedule really sets you apart from a lot of other people. And my business partner is not very good at follow-up. And so we work really well together. He says he'll tell you this too. Like he's like, I've probably lost over a few $1,000,000 just because I'm not good at following up. And you know this too, Corey, just with raising capital. Sometimes you meet someone, they're super excited about a deal. They're like, okay, I'm going to review this. You give them a few days to review. You call them. They're like, who are you? And it's like, actually, like we talked 3 days ago. And so that's how you build those relationships, right? That lasts a long time. And so being able to just be consistent and following up, I think, as well as being able to solve puzzles, that 5% difference in every single deal and being able to work around that. I think those are the two skills that I'm good at. But obviously, like I said, there's so much that I'm still learning.
Yeah. And the sentiment that every deal you learn something new, no matter how much experience that you have, it does seem like every deal teaches you something new, whether it's how to deal with, a certain client type, whether they're great to work with or they could be difficult to work with, or there's a problem that comes up in due diligence and how to negotiate that, how to work around it, how to, depending on which side to work you're working on. Yeah, there's a million things to learn, and you really do get into the nitty gritty the more deals that you do. But talking about the strengths, let's flip the side of the coin on the other side to the weaknesses. What would you say are some of the weaknesses that you have, and what do you do to compensate for them?
Yeah, so a lot of the weaknesses, funny enough, I'm a major introvert. And so a lot of my weaknesses when I go to networking events is being able to break the ice. Because right now, like if I'm talking with a broker or if I'm talking with a potential investor or if I'm just networking to, to build relationships, it is super important that you make a really good first impression. And for me, it's really easy for me to talk with people after the ice has been broken. But my biggest weakness is breaking the ice. So just figuring out ways to do that. I made a post about it on LinkedIn a little bit ago, but the way that I have found out is most helpful for me to break the ice is say something good about the person you're trying to talk to. A lot of times we go up, we're like, hey, like, what do I say? How do I say this? But if you go up to someone and you're like, hey, like, nice to meet you. My name's Steven. Tell me a little bit about yourself. We're at this networking event. Tell me a little bit about yourself. And then they start talking, you learn something. You're like, man, that's really cool that you do this. And then it's like, once you start talking about them and how cool they are and what they do well, it's super easy for the conversation to flow. And so that's how I've kind of compensated for, me being introverted is I force myself to go to things that I know I should be at that get me out of my comfort zone. And I always look for something good to say about somebody. And that usually helps out.
And for you, do you tend to focus more on improving or utilizing your strengths, or do you tend to focus more on the places where you feel you have some weaknesses in and need improvement?
Yeah, funny enough, I would say both. So for me, we hired an executive assistant to help us with the things that we're not really good at, right? So like our CRM, everything that we have going on in the background when we're not on the phone with someone or at a meeting with somebody, she's actually helping us do all the automations and all those things. We have someone who helps us with ads. I'm good with ads, but somebody is a lot better and we pay them to be really good at that, right? So yes, it's super important for me to focus on what I'm really good at, which I feel like I'm good at talking to people and I feel like I can do well at talking with investors and finding good deals. And so that's what I focus on, right? But with those other weak things, we've definitely hired people to help us do that. And that has made things so much smoother.
I love it. I love it. Yeah, utilizing people to bridge the gap in places where you think that you're good, but if there's someone out there that can do it better and can save you time to go and focus on the things that you really excel at, that can be very pivotal for anybody's business. And speaking of pivotal points in business, what is a deal that you feel like you learned the most from?
Oh man, in the brokerage world, there's two specific deals that I can think of. In the brokerage world, I sold a Swig and a Mobetta's property in Oklahoma. It's in Yukon, Oklahoma, but I was working with a developer and being able to manage a developer's relationship and finding a seller broker and manage that relationship are like the developer is doing all these deals, they're developing this property and seeing what they are looking for and trying to get as close to that as possible while having this buyer and their expectations, right, to get the returns that they're looking for. I learned so much about the perspective of sellers and buyers in that deal. And it took a long time to get it closed, but we ended up getting it closed and transferring that knowledge over to my current position where I am now the buyer and understanding where sellers are coming from because I got to work with developers. It's like that one deal really helped me out. And then this most recent transaction that we did, we just closed on a 27 unit value add property in northern Utah. And the sellers were pretty sticklers. And our buying metrics, we were doing everything we could to make sure that we could close the deal and still get the returns for our investors. And that's where like the biggest 5% of like all of this revolves, all the 95% of work that we've done revolves on this 5%. We had to be really creative. So I learned a ton in this last transaction too. And we were able to get the deal closed, right? And so that's what's really important. So yeah, those two deals, one on the brokerage side, and then using that, what I learned from there on the buying side, those have been two really pivotal moments for me.
And so those are two examples of some difficult deals that you learned a lot about. Would you say is your biggest success to date?
Oh man, I think my biggest success is so because I left brokerage, I have helped my business partner in the last year buy over 110 units here in Utah. And that has been awesome because actually it's more, yeah, it's about 110. So that has been awesome just because, focusing on that type of growth and that momentum that we're creating in this market, it's super hard to break into the Utah market. And we've done a really good job at doing that. And so we've broken into the Utah market. We've done this all across the country, and now breaking into the market that we want to focus on and be in. And now having people talk to us about, hey, like, when are you buying your next deal? Or, hey, like, when can we invest in your next deal? Or, you know what I mean? So like being able to break into a hard market to get into that produces a lot of good results has been a massive success for us. And of course, we're going to have more, right? We're going to have more and more successes, but I think that's a really big one.
Yeah, trying to, because the Salt Lake City market is a very hot market, along with a lot of, the South and Midwest markets, talking Florida as well. I mean, anywhere that was really hot has been extremely difficult to compete with, especially if you don't have institutional capital ready to go, and purchase these deals. On that 110 units, was that all one deal, or was it spread across a few properties?
Yeah, it's spread across a few properties, two deals specifically, and 3 properties. But yeah, it's been awesome to operate and really grow the value of these properties, like we said we're going to.
So let's talk more about that and how you guys got this deal, how you broke into that market. Where did this deal come from? How were you guys able to source it, and how were you able to get it to closing?
Yeah, so our biggest bottleneck right now, as I'm sure a lot of people are dealing with, is finding capital and raising funds. And so being able to find the deals, coming from the brokerage world, had a really good relationship with a lot of good brokers. A lot of times brokers, they go in, they're bulldogs, they do really well, but they taint some relationships. Me, I'm kind of a soft-hearted guy. I just want everyone to love me, and I want to love everybody. And so that carried with me in a good way after I left brokerage, because now I have been able to create a lot of really good relationships with brokers who now send us deals that are in our buy box before they send them to any other person. So for these 3 properties that we've been able to find, one of them was a 56 unit that was being operated by a really big operator, and they ran out of capital because interest rates, they had a variable rate interest loan. And so they're like, okay, we can either do a capital call for $2 million, or we could sell at a loss for $1 million. And they ended up extending their loan for 6 months and selling at a loss for about $1 million. And luckily we were able to pick that up. And then a mile down the road, we had this guy who owned a bunch of single family homes, and this was his only commercial property. It was 24 units. And you know this because you've been in both worlds. Commercial real estate and residential real estate are very different, especially from an agent perspective. And so he's trying to sell this commercial property with a residential agent. And, that residential agent didn't know everything and didn't understand the process of a commercial closing and versus a home closing. Home closings happen, 30, 60 days, and very minimal stuff happens, but commercial properties can take up to 90, maybe even 120 days. There's a lot that goes on, a lot, contingent on how the property is still performing within that time frame. And so we were able to get that one at a steal. And so we put both of those properties together in a portfolio. And then, but we were able to do that with the relationships that we've had with these brokers who have been sending us these deals, right? And then this 27 unit that we just closed on, it's a townhome property. And so it's a little smaller than what our buy box usually is. But because of the value add that's there, we're super excited about it. But that one had a cool story too, because the sellers have not visited that property since they purchased it in 2019. And so there's massive CapEx that needs to happen. We're spending about $1 million on renovations, but we got that deal before it got to market because the broker was the same broker that we used to buy the 56 unit. He told the sellers, he's like, hey, these guys can close. And they're like, well, we want to take it out to market. He's like, listen, I know these guys will close. And they're like, okay. So we ended up getting that deal before it got to market, and it's going to be an absolute home run for us. So making sure that you have those relationships is super key. Yeah, finding those deals with those relationships is how we've been able to get really good, projected returns for our investors.
Yeah, and that's fantastic. And congratulations on pulling those 2 deals down. I'm excited to follow that path and hear about the updates that you guys will be doing to those properties and how things are going. But when it comes to the relationships and getting brokers to send you deals, if you are kind of early on in your acquisitions career and don't have a track record yet, for example, somebody that's just getting started, right? And they want to start looking at deals and they haven't gotten their off-market engine going
Yep.
just yet. For gaining credibility with a commercial real estate broker to send you deals right off the bat, what are some strategies or some tips that you would offer up to folks so that they can get deals before they go on market? Because I know from my experience that on market deals are very, especially if they've been sitting for a while, the information is out there. It's more readily available than ever for retail investors, right? So how can you convince brokers, if you have no track record, to send you a deal right away?
Yeah, there are two things, and one of them is a lesson that I learned as a broker, and it's a simple phrase. It's like buyers are liars, right? And so if you're saying that you're a buyer and you're in the market and you're ready to move, then you better show the broker that you are going to do what you say you're going to do. Your first deal might be an on-market deal. Our first deal was here in Utah, but we saw it early, and we still, the number still worked, and we assumed that loan. It was a really good deal, but then that let us say, hey, listen, we just closed on this one. So it's okay if your first deal is on market, just find it early. But brokers will, the rule as a broker is you treat everyone as if they're legit until they show you that they're not. And so if you say that you're going to buy something or that you're in the market to purchase something and you're asking for this information, because that's what makes a broker very powerful, is their relationships and their information. If you're asking for that, then you gotta move on it and you gotta do something with it. And it's okay if you don't close on a deal. You give them really good reasons on why it didn't meet the metrics, and you say, send me another deal. And you just keep going, and then you'll close something. The second tip I would say is, after you do what you say you're going to do, is go out of your way to visit brokerages and bring them Chick-fil-A sandwiches. Like, it is such an easy thing to do, because as a broker, you know this, a lot of what you make is not salary. You eat what you kill, and it's hard to find deals to close right now. And so a lot of brokers are literally like hungry. And it's such an easy conversation to be like, hey, like, here's 2 Chick-fil-A sandwiches for everyone in your office. Let's talk shop. Let's see how we can work together. And so it really is as simple as a face-to-face meeting with some food for a broker, and then doing what you say you're going to do. Those 2 things will help you close more deals than anything else.
Yeah, and I agree. Staying true to your word is 100% what is going to keep you top of mind for a broker. And that's the thing that you need to focus on most, is being top of mind for these folks. So whether that is, it may be a long time before you find an on-market deal that you can even offer on, especially in this market, right? Like, I'm not so familiar with Salt Lake City, but I can't imagine it's that much different than a lot of the other metros around the country, where prices are very high from the seller's perspective and the brokerage perspective on market, and where you as an investor, especially when you're syndicating, can meet in the middle. So what you can do there is underwrite the deals quickly, get them an answer quickly, get them feedback, because a lot of times the brokers got the deal on some lofty expectations and they're looking for more excuses. They may have given the seller a great number that is closer to your number, but in order to secure the listing and get that business and hopefully work them down to where both parties can make a deal, then they might need some ammo to go to the seller with. And that comes in the form of more buyers coming out and saying, this is not going to work for me. But where you separate yourself is being able to say, this is why this doesn't work for me, X, Y, Z. This is my price. This is where we're at. And that is something that they can bring to the seller and start to work them down, so that, because it's kind of in their best interest for both people, you as the buyer and them as the seller, because they want to close the deal, right? They're still a fiduciary, but they're fiduciary in the respect that they have to give the best advice to their client, and that best advice is buyer sentiment.
That's exactly right. And we try to respond to our brokers within 24 hours of getting any listing or any deal. We'll do a quick survey of the deal. If we like it, then we'll give them some information on, hey, yeah, like, we like this deal. Send us a T12, send us the rent roll, send us, some of the other information. But if we don't like it, then we'll let them know that too, and for those same reasons. But that is such a great point. Like, if you have a motivated seller, chances are you're going to sell the deal. And going back to the brokerage side of things, as a buyer, you need to provide information, like you were saying, Corey, to the sellers, because sometimes they just have these expectations because their buddy sold a property and they're like, yeah, I can sell a property too. And he sold his for X amount of cap rate. And so I can do the same thing, even though cap rates have moved 200 basis points. Right. So it's like, you really need to know what you're looking for, and give that information right back to the broker so that they can take it back to the seller, and maybe you guys can work out a deal. Something else that we've done that's super helpful is you submit 2 offers. You've heard that on other podcasts before, but it actually really works. You say, hey, seller, there are 2 options here of how we can close. Usually it's market rate offer, but seller financing, or here's a little bit of a nicer offer for us with a little bit better terms for you. And sellers love when you can make a closing happen sooner rather than later. So if you can work that into your offers, then that also really helps.
Yes, and I'm so glad that you mentioned the 2 offer strategy, and that is something that I used to have top of mind a couple years ago, and for some reason I have just gotten away from it and forgotten about it entirely. So I'm glad that you mentioned that, because that is a really strong strategy, especially when you're the only buyer in there. It doesn't work so well when it's a multiple offer situation, because it kind of just muddies everything up and there's so much other stuff going on. But when you've got a listing that's sitting and you want to make an offer, especially if your actual best offer is going to come in, offensively more often than not,
Yeah.
that's a good way to kind of bridge that gap and let them know, hey, this is our number, but in order to kind of meet you somewhere, because I know that, we want to get a deal done and I want to help you out, putting those 2 offers together with 2 different sets of terms where price is in favor on one of them and terms are in favor on the opposite.
Yep.
So, or the other one. So I love that strategy. And I think that's something that I can probably come back to. I'm glad that you mentioned that.
Yeah, that's great.
That's strong. But going back into the transaction process, there are some key differences between the home buying process and the commercial real estate closing process, especially for multifamily. Can you dive in just to what that process looks like really quickly, just on a 1, 2, 3, 4 to closing type of situation?
It's actually pretty simple. It just requires a lot of paperwork and some time. So you find a property, you find a lender who's willing to lend on that property. You try to get the best rate possible. And by that, sometimes rate and proceeds don't always match up. And so for our deals, we try to find anything that's, 65 to 70% LTV. And so we're putting a little bit more money down on the table just to help on the downside risk, right? We're trying to protect against the downside risk. So if you can find a good amount of capital from the bank or the lender, you can get a pretty decent LTV. And then they go into the underwriting process on their end, right? So you have your underwriting that you send them. They want all of these third-party reports. So then you set up all the third-party reports, and a lot of times I'll do phase 1, which is funny because I don't know why you do phase 1 on apartment buildings unless there was something there that could have affected the environment beforehand, but they do it anyways. You get an Alta survey, you get an appraisal done, and all of those help the underwriting of the bank to secure the financing that they're going to give you. Once you get all of that, they also do underwriting on the partners on the deal. They want to make sure that you're investing your own capital into the deal. There's a lot of times, a lot of people out there will say, hey, invest without any of your own money. If you do that, you're going to have to get a partner to invest and sign on the loan with you, because the bank does require you to invest your own capital. Once you do that, typically it's about, 2%, 5% of the money that you're getting from the bank that they want to see you invest. And so if you have enough liquidity, if you have the capital to invest, then they'll continue moving on with the deal. Then closing is always, an absolute nightmare the week of. You're just trying to figure out get all the other ducks in a row, right? The new rent roll, the T12 they want to see again, and then making sure all of the documents are signed and all the third-party reports are back. And then once that all settles, you wire the money and then you own the property, right? And I wish it was always that simple. It very rarely is. Stuff usually comes up and you have to get stuff. That's part of that 5% that we're talking about that is different in every single deal that you just have to be able to work around. But the steps are pretty simple. 1, you find a deal, you underwrite the deal. It looks good. Move on to step 2. Step 2 is go find a lender. During that process, you're also looking for insurance companies to insure the property, which in Utah is actually not bad compared to other states. Finding insurance here for Utah is actually pretty decent, and I've actually been really surprised. But that's when you're doing all your due diligence. You send the deal to investors to see if you can get enough equity to come in on the deal with you, so that during your due diligence phase, you check out the property and make sure it's all good, and you don't have to back out of the deal because you don't have enough financing, right? So 1, 2, 3, and then 4, after due diligence is over, the earnest money is hard. You're not getting that back usually. You finish the raise, you get it closed, you get all the paperwork done. 5, man, operate the property. It is like that is it's it's not like a successful hoorah. It's more like a relief that the deal is over. It's like it's finally done. We can move on. We can operate it. Those are the 5 steps. It's pretty simple that way.
Yeah, and thank you for diving into that. And yeah, it's funny because you would think, okay, we've got the property closed, time to celebrate. Not really though. It's kind of just the first hurdle in the track meet, right? Because that is the first and hardest hurdle to get through, and now you've got the rest of the track meet, which is all of the steps of executing that business plan over the next year, year and a half, maybe 2 years, depending on the property. And so I want to talk more about that, and you can use the most recent either full cycle deal or this business plan for the most recently acquired property. But what are you guys going to do, and what are some tips for operating and flipping an apartment complex, that maybe some common mistakes that some new investors, or when you were just getting started on the operations side, that you could give to our audience? What are some tips there?
Yeah, some tips are, and we actually just talked about this. I posted on LinkedIn today too, but there are so many. But make sure that you're doing the correct renovations first. Do the renovations that everyone can see first, and then people will really notice that you're actually trying to improve the property. For example, sometimes people will go in, they'll buy a property, and they'll do all the interior renovations first. And that's not a bad business plan. Tons of people do that. That's not bad. But that means that you can only raise rents on one apartment at a time as soon as it's finished. Versus when you provide value to the whole property at once, you're allowed to, or you have a good reason to raise the rents for the whole property altogether. And then you go inwards and start doing the renovations on the interiors of the properties. I think a big mistake that we have made is cutting costs in the past to try to make sure that we're saving some type of dollar in the future. And by cutting costs, what I mean is using some contractor who say they can do it super fast and do it for super cheap, but then usually that never meets your expectations. It never lasts as long as it says it's going to last. You're having to redo the renovation anyways. And so always, in my opinion, it's better to pay more to have a good, long-lasting product versus paying less just to say you saved a bit of cash, because usually problems come when that happens. So do it. Those are 2 things that we focus on: making sure that we're paying the right people the right price to do the correct job, and then doing stuff that everyone can see first, and then working on the interiors after that. And then priority. This is the third point, and it kind of goes along with the second, but making sure you're renovating what needs to be renovated first. And what I mean by that is, when you buy an apartment complex or an apartment building, there's going to be some apartments that look nicer than the other apartments. It always happens. You want to save those ones for last, because sometimes you run out of capital for your renovation budget. And it's okay to run out of renovation budget if the really good units that could be renovated aren't renovated, versus, you're just renovating things as they come available. And, what if you get left with 2 or 3 units that are in terrible condition, but you've run out of, renovation budget because these tariffs that are coming are going to raise prices, right? So it's like all the quotes that you're getting, you might have to readjust for that. And so making sure that you're prioritizing where you're putting your capital when you do the renovations is another big thing.
Yeah, I think those are top of the list for myself as well, and I couldn't agree more. The sentiment of getting the exterior work done first and early on into the process is a huge thing, and we've done that on the last few properties that I've been involved with. Sign change, repaving the parking lot, doing some landscaping. Those are almost always the things that we do first. And the tenants, they get a little apprehensive after the close and during the due diligence process, because you are very involved in kind of busting up their lives a little bit with doing tours and inspections and things like that, and it can really get on their nerves. So come closing time, you might have a chunk of tenants who are a little disgruntled. And so when you come in afterwards and you let them know by making these changes, like, hey, we're not just coming in to jack up your rent and really do nothing or over renovate this property and boot you out. They see that these are places that they want to live. They like the area, they like a lot about it, and a lot of times you're just getting things up to market, right? So when they see that you're actually going through and improving the property, that makes them feel so much better about where they live, and it does make it more valuable to them to stay there, because even though their rent might be going up, but a lot of times they're more than okay with that because they're actually happy with the changes that are coming to the area. Imagine you live in a bad spot and they throw in something, a nice new shopping center or something like that, or an office, your work moves closer to you, things like that. That makes things more valuable. But yeah, I love that. And then yeah, things getting a little tight at the end and not leaving the better units for last. That is a great strategy that I hadn't heard before. So I love that. Any other common mistakes that come with the business plan and the operation side of flipping the properties?
Yeah, I think a lot of times too, and you mentioned this earlier, it might have been in our pre-call or whatever, but sometimes with your projections when you're underwriting a property, sometimes you want to be really aggressive on a deal because you want the deal. You want to break into a market and you're like, these numbers are plausible. They are maybe a little aggressive. I would suggest that, and from you probably know this too, Corey, but a lot of times when I tell people some of the projections for our property, they're like, that's too good to be true. Like there's no way you can achieve those numbers. And I get to look at them, and I'm like, actually, the way we underwrite our deals is if the market in the future in 3 to 5 years is worse than it is today. And that's how we underwrite our properties. It's not as if things are going to be getting better. It's no, like we'll be able to increase the NOI on our property, but things in the marketplace might look a little worse. And we add 10 basis points every year we hold the property to the cap rate, essentially is our simple formula. And so that's another thing I think some deal makers and syndicators are missing a little bit is people are more or will want a deal more if they know it is underwritten a little bit better with a little bit more conservatism and the returns are not as good, but they're more achievable. So that to me is what I think a lot of people need to focus on is making sure that you're giving good numbers to people that you can achieve by underwriting in a slightly worse than today economic outlook.
Yeah, the sensitivity analysis on your exit cap, because kind of the two things that really move the needle the most, there's generally three, right? There's the acquisition price, what your going in basis is, your exit price, your cap rate, your exit cap, and the rent bumps in the middle, your change in NOI. Funny enough, the change in NOI actually affects, if the difference in that affects your return much less than your going in basis, what you bought the property for, and what the actual selling price is. Two of those are very easy to control and plan for. The one that is probably the most influential on a deal and the hardest to accurately estimate is your exit cap rate for the market. And so it's very important to be conservative on that and say, yes, if things get worse, we're still going to be great. Because if things get better, boom, you've hit a home run. If things are the same, then we've got a great performing property. But if things get worse, and this is where a lot of people got in trouble in the last few years, big trouble, is thinking that you're going to have these low cap rates or even highly improved cap rates. And I saw something recently, and I'd like to get your point because you are active on LinkedIn. I saw someone mention that operators should be lowering their exit cap rate expectations because they're improving the property. They're moving it into a higher asset class. They're moving a C to a B minus or a B, and that exit assumption needs to reflect that. Now, I agree with that line of thinking, but I think that line of thinking can get you in trouble. But what is your opinion on that?
No, I think you're exactly right. So you're essentially saying that person is saying, hey, if you're taking it from a C class that you bought at a 6 cap, at a B class, you should sell it at a 5.5 or 5 cap, right?
Yeah, more or less.
For us, we're going the exact opposite way. And for every single reason that you've talked about, we are trying to protect against downside risk. And a lot of the downside is that big factor that we cannot control, that we try to do as well as we can to predict, right? But it's what the current market state is. And so all of our loans, we try to make sure that we get some flexibility on the back end so that we can exit early without paying any fees or minimal fees. And then, or we try to find a loan that allow us to extend a year or two extra, just in case that the market isn't where it needs to be for us to hit our projections, right? So yeah, I agree with you 100% on that idea that you need to be a little bit more conservative on your exit cap rate, especially when there's so much uncertainty in the market going forward. And the way we do that is by adding 10 to 15 bips um, for every year that we're holding the property on the cap rate, even though we're improving the property.
Yeah. And for example, if you're someone listening and you're wondering how to analyze exit cap rate, what I do is I look at what the current market cap rate for a stabilized property in a similar area that I'm looking at is currently going for, right? So that is where I base things off originally. So a lot of times we're doing value add, you're going to have a refi in year 2. What I'll do is I will typically take the current exit cap rate, add 50 basis points to it, and that's my refinance cap rate, because you gotta throw something in there to get the numbers out. Then once I have that, then the exit cap rate, usually 3 or 4 years later, the first thing I'll do is I'll keep it the same.
Yeah.
I'll just keep it flat and the same, 50 basis points higher. And if it still looks good, I'm great. Then I'll start running. If it still is tight or it's not hitting the numbers, and I want to reel things back just a little bit to see how far the deal can stretch, I will never go further than what current market rate is, current market exit cap rates or cap rates.
That's exactly right. We do the same thing. And that's our stress test, right? And it's proven we've had 10 exits. We've averaged, upwards of 20% returns to our investors. And we've done it within, 2 to 3 years. We've doubled investments or tripled investments within that time frame for those deals. And so that really does help because, we've had a few deals that have been absolute rockers, got 43% return on a deal and 34% return on a deal. But then we've had a couple of duds, right? And those duds were because of the market conditions. And so it does affect a lot of things. And so, yeah, just being able to prepare as much as you can and protect yourself against the downside as much as you can. That's super helpful that way.
Yeah. And for people who are looking for, high returns and they're worried about risk, the main goal of investing is to preserve your capital, not to lose your money to inflation and lower interest rates and opportunity cost. So when you start looking at deals and, deals can fluctuate. Things can happen. The market changes. Commercial real estate is more volatile than ever. And as an investor, for your mindset, you need to remember that it's about capital preservation and growth. And when you're investing in real estate in these types of deals, you should be looking to beat the stock market. Anything over 7 and 8% should be counted as a win. Anything over that, and especially since we're targeting double, since the risk is a little bit adjusted for that, then yeah, that's great. But the number one thing that I think investors, especially because they've gotten spoiled the last 5 years, right? They all demand 2x return in a year, 2 years, something like that. And so I think that as an investor, you need to remember the whole goal is to grow your wealth and not lose it. And so I think a lot of the things that we do to approach the deal feeds into those purposes and is aligned with the investor's mindset. So, and I know we're coming up on an hour for our time here. Do you still have time for one more section?
Yeah, for sure. Yeah.
Okay. Perfect. Because I do want to talk about capital raising. I wouldn't want to talk to you without getting into that. So tell me what your role looks like right now with capital raising. How are you involved with it? What does your duties look like for that side of things?
Yeah, I am really in charge of finding capital. Like everything that you would think that you need to do to raise capital, I am doing. I go to events, I do online marketing, I do all the follow-up, I do calls, cold calls, warm calls, all of those things is what I'm doing. And then I help coach our clients and investors through the investing process, right? Help them get their stuff set up on our online portal and make sure that they're able to track their investment. Because like you said, most of them just want to make sure that they're not going to lose money. And so we're providing them all those services to help them track that, to make sure that they feel comfortable. So day to day, what it looks like for me is I try to go to 1 or 2 events a week where I can network. I actually have one today. Yeah. And so I network a ton that way. I am on LinkedIn all the time, posting what I'm doing, personal stuff in my own life, but also stuff what I'm doing for work, letting people know that I'm a real person and I have a personality is super big. And then if I'm not doing any of that, I am cold calling and contacting our marketing leads on a daily basis. And that's a whole process in and of itself, right? I always feel like there's not enough time. And I've never really understood that until probably the last 6 months. I just feel like there's just not enough time for anything. And so, but raising capital is more of I love underwriting the deals and talking with brokers, but I really love talking with people, raising capital and providing them an opportunity to grow their wealth.
Yeah, and you and I are very similar in that capacity. I love the hunt for a deal. That's very exciting. But truly there's really only a couple levers that you can move in that area to get things done, and it can be much more simplified than the approach and what is necessary to raise capital. Raising capital is probably the most difficult thing to do right now. And I would really equate it to the metaphor of you've got an oasis in the desert, and the oasis has been full and plentiful. There was a big rain in 2021, filled it up, and the water since has been drunk and dried up. And now here we are with, people had all the water in the world, all the capital in the world flooding into their lives and their business. But now things have really tightened up. Things have changed in the market. And so going out and being able to source capital is something that I am learning how to do and changing my role. And today I spoke with somebody, an advisor, and I told them I'm changing my company from a real estate company to a marketing company because we specialize in real estate. That is not the problem. The problem now is the marketing, and that
Yep.
is the number one hat that I am wearing right now. And so what are you doing in your marketing to attract leads? What does the messaging look like? What are the tools that you use, and how many investors are you normally talking to each week?
Yeah. Really good questions and kind of let you know. I mean, what you're doing is essentially, if you know his nickname is Beardy Brandon from Bigger Pockets, right? He has an amazing marketing strategy. And because of his marketing, he's been able to fund all of his deals. Alex Hormozy, those books that we were talking about earlier, he has been a multi-millionaire from getting leads and being a marketing company. And so that idea is so spot on. And so what we've done is we have hired a few groups to help us with our online marketing. Afterwards, they're going to teach us how to do it. So we're filling them out, seeing how they do, and then they're going to teach us how to do it and bring it in-house. And I think that's the best practice because then you're going to see it work in real time. You get to see how things work, and then you get to adjust for yourself. What we have learned with our marketing is that video ads do a lot better than stationary ads. Both work, but we tend to get better engagement and more qualified leads when we use video ads. And then those ads typically are like 15 seconds long, maybe 30 seconds. They have an awesome hook. They have awesome information about the deal, and they always have a clear call to action. And so what we found with that is after we get them to book a call with us, we actually start sending them videos, until they meet with us. Sometimes it's how many is it? We have a business partner who wants us to do 7 videos a day for 3 days. I mean, that just seems like overload, right? But make sure that they show up to the meeting. And so we'll do probably 4 a day and until they show up to the meeting. And then after the meeting, after we have the call, we'll send them post meeting videos to help them stay engaged with us. Because you know this as well as anybody. If someone's finding something online, they're scrolling, they find one thing, and because they clicked on that one thing, they're going to find 15 other ones. And so you mentioned this earlier, being at the top of their mind and making sure that they understand that what you can provide is going to be valuable. That's how we do our whole marketing strategy. We funnel them in to the ad. They go to the landing page. From the landing page, they give us their info into our CRM. Our CRM starts the process of sending them all the videos and contacts, and I'll call them. But yeah, it's very simple that way, but it takes a lot of work to set it up. I mean, becoming a marketing company, you have to set up all the workflows. But once you have them set up, after you've spent hundreds of hours setting those up and making sure that they all work, you click live, and then the funnel works. And just like your money works for you when you invest in real estate, when you're sleeping, this will work for you while you're sleeping. But it's actively trying to get you more clients. And that's why it's so valuable to me, because, and I'm pretty passionate about it, is because the more you can get people in the door, the more people you can get in the door, I mean, the bottlenecks go away, right? So you're spot on calling it a marketing company that has a real estate investment opportunity, right? So that's on.
Right. Yeah. I mean, the way that I'm approaching it now is the product that we sell is the real estate. It's the investments. The thing that we need to do more than anything is marketing. And where I got that from was especially over the last 5 years, because even a a bad syndicator, if you were a good marketer, people were throwing money at these people just because they were on their feet. They had no business being in real estate, being in syndicating. They saw what they could make on acquisition fees and potential exits and do a decent job. And some of them got out quick enough, but you see these horror stories. And even in conversations that I'm having with investors, especially new, and when you're new to them and your company is new to them, how do I know that you're legit? Is your alignment correct? That's something that we're hearing much more focus on. Are your acquisition fees in line? How do you get paid? They're focused more on that because they hear about all these con men who raised millions, tens, hundreds of millions from people and failed and just flat, fell on their face and lost these people their money. And they gave us a bad name because it got so popular. And I vowed to myself, I am never going to let a shitty syndicator who's a better marketer beat me ever again. Because I am fully interested in helping people and through real estate and through investing. And there's no way that somebody who gets deals like I do and the deals that I have should have a problem raising capital. People need to know about it.
Yes, absolutely. Absolutely. And for people who might not know why so many deals got hosed is people saw that the bank was basically giving away free money with little to no, step up in basis or gap. And so the thing about it was people would borrow this cheap money from the bank, and then it was a variable rate interest loan, and it just increased like crazy. And so all of their dollars that they were raising for the renovations got put into the mortgage. None of the renovations could get done. Then they run out of capital, and then interest rates go up and they can't refinance out of it. And so a lot of people got sucked into that idea of the market is back. It's hot. It's going to stay this way for 5 years. And it went away in 2, right? And so that's where a lot of people got sucked in. But what I will say about where we are in the marketplace and raising capital is because it has been so difficult, we have been really good at creating good processes that I don't think we would have created if raising capital was easier. And so really hard times make really strong people. And I think this is a good time for good syndicators like you and I to get our processes in line, make sure people know who we are and that we are good people, honest, transparent people, and that we can provide value to them, right? So yes, it is super difficult right now to raise capital. You still can do it. It takes a little bit more work, but because of that work that you're going to be putting in, your processes are going to look so much better than they would have otherwise.
Yeah, and I was speaking with someone who is the president of a nonprofit here in town, and we were just jamming on some ideas. And the thing that was brought up quite a bit was the fact that this, with everything being so difficult right now and where we are in the market, this is a time to really, like you said, focus on your systems, focus on your operations, because it was easy to do things 4 years ago. People would just write checks and deals made sense and this and that. But now when the going is tough, you see who can survive, you see who can pivot, you see who can adapt. And that's what we're doing right now. And being able to do that successfully is what's going to set you apart for the future and to help do an even better job for your investors and your stakeholders and your tenants, everybody involved. And so this is a time, especially with how much technology there is out there to help out now. Because before I was doing it with sticks and stones. Now I've got a little bit better system. So I'm hoping to build something that's, very, very automatable, very easy, very fiduciary based, and a great experience for investors.
Yeah. And you're exactly right, using technology. And I just want to point on something too that you mentioned earlier about making sure your role is in line with what your investors are looking for. Sometimes you might find a good deal, but as you start looking at it, the numbers look good, but how are you going to market the area, or how are you going to market that opportunity to investors, right? And then making sure that your fee is in line with what industry standard is, or maybe a little bit better for the investor to give them a better return. And, just being transparent that way will go such a long way. So even if you are still using sticks and stones, people still made money that way, right? And so it does cost money to make money sometimes. And a lot of times right now we're seeing that happens a lot, but there are ways to make sure that people know who you are. And the best way to do it is be honest, be transparent, and follow through with what you say you're going to do. And then if anything ever happens, good or bad, always communicate it. That will go farther for you than anything else will. Just because people know that you're going to tell them what's true. And it's a lot easier for people to jump a hurdle or go over a speed bump when you put up a sign saying, hey, a speed bump is coming. Right? If you're driving down a road and all of a sudden you just go over this massive speed bump and you're going 45 miles an hour, you're like, that just took out the bottom of my car. Versus, hey, a speed bump's coming, let's slow down, we're going to do this. Okay, I'm slowing down, I'm not getting what I want right now, but it will come. That really goes a long way. So just focus on, no matter where you are at in your process, focus on being transparent and honest, and you'll be successful for sure.
I love it. I love it. I was going to ask you later, what was the last piece of advice that you give people to send them off? But that was perfect. I mean, the communication and how to approach the investor relations side. I mean, there's so many gold nuggets in this episode. And I have two more non-real estate related questions to tie it up. But before we do, Steven, seriously, thank you so much for being on today. It was an honor to host you, and I really enjoyed our conversation today.
Yeah, you as well. I love meeting good people all across the country, and you're a really good guy, and it's been awesome to be on this podcast. Appreciate it.
Well, I appreciate that. Well, tying it up, these are non-real estate related questions, more just kind of fun ones. What was the first job that you ever had?
Man, I actually took care of horses and did a lot of yard work. So that for me, just being outside, setting up fences, taking care of horses, feeding them, cleaning them, making sure that everything looked good was really hard work. And it took a lot of hours. And then just like yard work, right? Like getting dirty, being outside. And yeah, those are my earliest jobs that I can remember that I got paid for, right?
How old were you?
I remember working with horses when I was like 8 to 10 years old.
Oh, wow.
Yeah, and then yard work, you know, probably, from 12 to 16, 17. And then I really focused on sports, and that's how I paid for school, was through sports, right? So I focused on that hard work ethic and doing all that stuff before then.
I love it. That's interesting. I always love hearing people's first job, for how they sometimes you can see like a trend developing, but I love the random ones even more.
I went a completely different direction, right? So I was really into sports and coaching, and I thought I was going to be a football coach coming out of college. But then the real estate thing it hit home for me. And so coming out of college, I pivoted to real estate, and I'm super grateful I did.
And last question, if you could go back in time and give yourself advice, when would you go to and what would you tell yourself?
Man, I'd probably go to myself a year ago, honestly, and just say everything's going to be okay. Like if I have 4 kids right now, and we just had our 4th one in November this last year. And then we moved out of our apartment and we bought our first house, and we had to get a new car because now we have 4 kids instead of 3 kids. So they don't fit in a 5-seater. So we did a lot of things this last year that I wasn't planning on doing. And a lot of things changed, like expenses changed, right? And I think I would probably go, I'm going to change my answer. I'd probably go back to my college days and just say it's okay to do something other than sports. Like, you'll be just fine. Go into real estate and you'll crush it, And I think that's what I would do, because I would have changed a few of my things that I did in college to be a little different, and maybe have been even a little bit further ahead than I am now, right? That's where I'd go to, is my college days. You're going to be fine. You're going to marry the girl that you want to marry. You're going to have the family you want to have. And just keep grinding.
And Steven, I know you're active on LinkedIn. Is that the main place you would like people to find you?
For sure. So streamlinecapitalgroup.com is our website. It's kind of long, but streamlinecapitalgroup.com. And then on LinkedIn, me and my business partner is Brian Briscoe, and he's super active on LinkedIn. I'm active on LinkedIn. So those 2 places are probably the best places to connect with us.
Wonderful. Steven, thank you again. It was a pleasure and an honor. Guys, thank you so much for tuning in today. I'm your host, Corey Mortensen. This was Steven Richards, and we'll see you next time.